Good morning, viewers, and welcome to the Financial Morning Briefing. Let's dive right into the key pre-market data. Market sentiment is clearly tense this morning, with all three major index futures pointing lower. S&P 500 futures are down 0.5%. Nasdaq futures are leading the decline, falling 0.7%, while Dow Jones futures are down 0.3%. At the same time, the market fear gauge, the VIX, has surged over 7% and is currently at 18.86. The yield on the 10-year Treasury note continues to climb, reaching a high of 4.26%. The US dollar index is fluctuating narrowly around 98.2. In the commodities space, WTI crude oil is the standout, skyrocketing over 4.5% to $86.37 per barrel. Gold is up slightly at $4,835.9 per ounce. Bitcoin is trading around $75,216.75. Putting this data together, we can clearly see that risk-off sentiment has taken hold even before the opening bell. The leading decline in Nasdaq futures and the spike in the VIX point to a lower open that is likely to extend, with a high probability of 75%. So, what's the core driver behind this? We believe it's primarily macro-level headwinds. The rise in the 10-year yield to 4.26% is a direct negative for high-valuation tech and growth stocks, as it pressures their future valuation models. Meanwhile, the VIX jumping to 18.86 is a clear signal of market anxiety, forewarning heightened intraday volatility. Commodity action is adding to these worries. The sharp rally in oil prices boosts profit expectations for the energy sector, but it also stokes fears of economic stagflation, which is negative for the broader equity market. Gold's modest gain reflects some safe haven flows. Therefore, from a risk appetite perspective, the market is undoubtedly in a risk-off state. Capital is flowing out of the riskiest assets, especially rate-sensitive tech stocks, and moving towards defensive sectors like energy and utilities, or simply into cash. Looking at specific sector directions, the energy sector is highly likely to outperform the broader market today, with an 80% probability, driven primarily by the oil price surge. Conversely, the semiconductor and AI sectors are under pressure and may underperform, with a 75% probability, as they face the dual headwinds of high yields and falling Nasdaq futures. Leading stocks like Nvidia are already down 0.51% pre-market. Additionally, defensive sectors like utilities and consumer staples have a 65% chance of showing relative resilience, a direct reflection of the prevailing risk aversion. There's one notable pre-market divergence: the Bitcoin spot ETF is trading higher, but Bitcoin's price itself is down, and related equities are also weakening. This suggests isolated buying in the ETF itself, failing to lift sentiment across the broader crypto-related stock complex, and its impact on the overall market open is expected to be limited. So, how might the market move today? Let's walk through the intraday path. In the first hour after the open, the market is highly likely, 70% probability, to extend its losses with a wave of follow-through selling. The primary path for the entire session is more likely to be a trending down day, with a 65% probability. Consequently, our trading strategy leans towards the short side, with a confidence level of 75%. A specific entry signal to watch for would be if the Nasdaq index, after opening, shows a weak rebound that fails to recover even half of its pre-market decline before turning lower again. Conditions for adding to a short position would be if the VIX breaks above 19.0 while the 10-year yield holds above 4.25%, confirming sustained fear and rate pressure. Signals to reduce exposure or be cautious would be if oil prices retreat more than 2% from their highs, or if the VIX falls back below 18.0. A stop-loss condition would be if the market stages a powerful reversal, with the Nasdaq index recovering all of its pre-market losses, indicating our trend judgment was incorrect. Based on this analysis, here are a few verifiable predictions. First, the Nasdaq 100 index has a 70% probability of closing lower today, with an expected decline between 1 and 1.8%. Second, the energy sector is highly likely, 80% probability, to significantly outperform the semiconductor sector, with a performance gap potentially exceeding 3 percentage points. Third, the market structure will show a clear defensive overgrowth tilt, with a 75% probability. Fourth, there's a 65% chance the VIX will touch or even break above 19.5 during today's session. In summary, our probability assessment for today's market is as follows: only a 15% chance of an up day, a 20% chance of a sideways day, and a high 65% probability of a down day. The market is facing a triple test from rates, inflation concerns, and risk aversion. Investors need to remain cautious, manage their positions carefully, and prioritize defensive sectors and energy stocks benefiting from higher oil prices. That's all for our pre-market analysis. We'll see you during the trading day.